So, Neeraj, I believe that there are three, four themes which we are liking. First, I think consumption, and especially mass consumption, has been under pain for the last few years. We see that changing. And sectorally, if you look at the allocation of investors, it's at a very lower number today. So I think incrementally, when you see the results also this quarter, FMCG and consumer discretionary have started to show incremental positive change. And I think consumption on discretionary staples, mass consumption would be one place over the next 12 to 18 months. The second is the entire auto ancillary space. I believe there's a significant change happening in that space where a lot of auto ancillaries are also pivoted themselves to industrial parts. And many of them will see very strong earnings momentum over the next few years, not only led by autos, but also by industrials. And they are also significant players now in defense, railways, and stuff like that. So that's something, and valuations are not, very exorbitant. The third is pharma, and we saw the results on pharmas also, both on domestic and US generic. There seems to be decent delivery by most pharma companies. Fourth is financials on the private sector. I believe valuations for the franchise and the deposit franchise they own, I think was quite reasonable. And after 3 and 4 years of underperformance, I think private sector financials can make a comeback. So these are the few areas where we are positive. And the contra bet will be chemicals. Incrementally in this quarter, we have seen mixed response from few companies. Some companies have shown incremental positive change. Some are still reverting back to mean. I think this space, if it comes at a decent valuations, could be interesting space to look at. And last but not the least, I forgot, the entire power value chain. Valuations are challenging, but it's a mega trend in making, not only in India, but globally. I think transmission is one area where I think there will be significant investment globally being done because the kind of electricity requirement we are seeing in terms of growth is unprecedented. 20 years, US was having a flat growth. And now after 20 years, you have seen 2 to 4% growth in electricity in US itself. And transmission grids are not equipped. So I think in US, globally, and in India, you will see huge capex on transmission. And hence the entire value chain starts to look very attractive. Valuations are only challenging right now. So in this correction, if we get some good names at a decent valuation, that's one area to look upon.